All right. I think we are live. Um, and this is, it's amazing these days what we try to do here. We are trying to get all tech savvy. So we have, whoever's joining us today, we have instituted Restream, which does links our FigScore network to Facebook and a YouTube channel. So we will be pushing this out more this way, and we want to get as much reach of a town hall as we possibly can. We are here to help, and we really want to make this feasible for people to get on. So welcome today, and let's jump right in. So today is really about following up on a few things. It's following up on PPP. We discussed forgiveness last week. We got good feedback on that went very well. And glad to hear that. We also want to see where people are at with their businesses and talk about some things people should look out for briefly as they're planning. And then again, if there's anybody on, I'd love to take questions. Happy to answer anything live. Just to give some updates where things have been. Generally what I feel, now this is my intuition as a financial professional, not necessarily what is fully out there from the federal government or officials yet, but I want to give some points. So to be very clear, the AICPA I mentioned last week is trying to push to get payrolls counted as accrual payroll. So for an example, if you're a company and your payroll is 2 weeks behind and you pay it on cash since you've received the money, what the rule says so far is that when you receive the money from that point on is what counts, what comes out of your bank account. So we are thinking they might be able to get that rule change. Mushin has said that he is amenable to some of the rule changes that have been presented. So maybe there's going to be some adjustments there where you can align your payroll precisely up with the forgiveness thing. So that is what we're hoping for. It'll make it a lot easier. It's more the normal accounting process rather than the cash process. So that is going to be good, hopefully. The other thing to be very clear on here is we really strongly believe that if you run your business the right way, you will get the most forgiveness you can get, and you will have the most cash available to you to succeed. So I want to reiterate that. It's not about trying to game the system. It's about trying to run your business for the long term, short and long term. So we're going to talk about some of that today. And then it should all work out for you. We're helping all our clients with that process and to be smart about it. So let me jump in here and see what's going on. So we're going to share the screen now and dive into our PowerPoint. So give me 1 second. Share the screen. Whoa, very cool. All right. So I believe everybody can see this. So this is our slideshow, using PPP for growth, strategies, and recommendations. So first slide, your outsourced CFO. We are your partner during these uncertain times, of course, and we want to help businesses understand the PPP. And in doing so, we're recommending you set up a 2-month and a 6-month budget plan. A lot of businesses, in doing that, you really need to think about how can I generate revenue? Do I need to adjust my pricing model? Do I need a discount right now just to get cash flow on board? What are the things that we need to do to stay relevant and keep our business alive while we're cutting, expenses that don't matter for our business, that are really not essential? We have to get productive employees, so manage that correctly, so on and so forth. We've talked about this a lot, but just want to highlight some of the main points. And in identifying better ways to do business, look at margin. If you have to discount, maybe there are other ways to be more productive to keep your margin at the same level. Organize your business financials. This is going to be critical. You can't wing it anymore. There's no winging it. There's no spreadsheets and sides. Use QuickBooks, use Xero, use Sage, use Microsoft Dynamics. I don't care. Whatever your business demands, use it, because you need to have a clean record of where you're spending your money. And you need receipts and covered and things to align. So very, very critical, even more critical nowadays. So we want to make sure that you're using these funds appropriately, the PPP. So let's talk about one aspect that people are concerned about. There's been a lot of talk, and almost like the media kind of freaking people out. I don't know if it's really the media. It's just a lot of people jumping on and throwing articles out there that you need to be careful. The feds are going to come after you if you don't spend the money correctly and blah, 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 not for the right sources. Now, let me explain something here that people seem to be missing. Let's say you're a $3 million business. Let's say when COVID hit, you had to partially shut down, not full shutdown, but you had to partially shut down, or you had to scale back. So now you're basically at $1.5 million in revenue. Let's think about that for a second. So you still have approximately $125,000 coming in, 120, let's call it 120 coming in every month. So you still have revenue coming in. Now, maybe it's not as profitable or not profitable, depending on your expense structure, but you still have revenue coming in. So what does that mean? That means the feds have not said you can limit your revenue use, meaning they haven't said, hey, this PPP money is there to supplement is there to take over for your revenue, and so bring all these people back. No, you also have other revenues. So the way we're thinking about this is, if you're using your PPP funds for the prescribed uses, payroll, rent, utilities, you have to use it for that. But if you happen to have revenue still coming in and you have extra cash flow, you can use it for other things, as long as those other things are, outside of the PPP. So you need a consultant to look at something. You need to buy a little bit of extra inventory. Fine, do it, but do it in the right way. Don't do it to exhaust your business and run out of cash. Run it the right way. This is what's so important here, is you have to be stable, because the PPP funds are going to run out. And so your business has to be alive. One, to pay back the PPP funds, and two, because you want to keep your business alive. It could support your family, or you want to get back to growth. There are so many things. And also, one other piece here. Remember, this is a new world. We're in a new construct for at least 12 to 36 months. That's what I'm hearing a lot. This is the new normal, and you need to adapt in the new normal. So let's talk about that. So calculate forgiveness. Again, the government wants your business to stay in business. Is your company waiting for demand to return? A lot of companies are in this scenario. There's some talk the government might adjust that also to align better with demand for some of your forgiveness. So just do your normal plan. Don't hire employees back too fast unless you feel comfortable with your business construct that you can bring them back. Look, we're all trying to help everybody here. That's what we're doing. So if you want to hire employees back because you feel like you can absorb that cost, then do it. Okay? And you'll get full forgiveness of the PPP. Great. And then your business hopefully will still survive. But make sure you're doing it smart. Then we got to look 2 months, 8 months, 1 year, and I would argue even 2-year projections, as you see, with varied scenarios. It's very important in this business. So before I continue, I just want to make sure if anybody's on here, if there are any questions. I don't see any right now, so we can continue. Good. So we'll continue. I wanted to give an example. So people understand what to do here to be very smart with your planning. I think this would help. I threw together some quick analyses here that might be helpful for you. So this is an example of where your business might have been pre-COVID. So let's assume you were doing $3 million in revenue. You had a material component to your business, whether that was your manufacturer or maybe you're a reseller, who knows, you had a material component. Then you had a direct labor component. Here's your percentage breakdown. So your contribution margin was 50%. Meaning your contribution margin means after all your variable costs, and these are all your variable costs, these are the dollars you have to put towards your fixed expenses, your pay, your rent, all the rest of the operation of your business. So in this construct, you had 50%, you had $1.5 million of the $3 million business pre-COVID. Here are your expenses pre-COVID. Occupancy, 4%. Now notice, we highly recommend that when you're tracking things, you always look at percentages. One, there's an industry comparison for percentages usually that you can use as a benchmark. Two, it gives you a good idea of future planning, 2-year planning. Where do I need to be to make profits? If, for example, we see occupancies anywhere from 2% to 8%. 4% is typically a healthy number in a lot of industries. So let's assume for this industry, it's 4%. So if you're out of line with that, you either have too much space or too little space. So these are ways to think about your managing your business. Admin expense, 8%. Typically a very good admin and expense structure for a business to support the growth of the business. Executive pay, 10%. Usually we want to say cap that because that's a healthy number for your business, meaning your executive pay, if you want to get leverage, if you want to keep growing and you want to have enough cash flow to grow your business, you want to kind of look at capping your executive pay at around maybe 10%. Again, depends on the business model where you can be for that. Some it's 5, some it's 15. Marketing expense. Now this is something that's so important. See that little bullet I put below there, marketing 5-1? So in this business, we're making the assumption that for every marketing dollar you spend, you get $5 in sales of return. This is something I want to talk about. This is very important. Managing your dollars right. Right now, your marketing spend is $200,000. It's 7% of your revenue, okay, roughly 7% of your revenue. So think about that for a second, okay? That's where you're targeted in pre-COVID. Marketing, you have to shift your marketing approach probably in this new scenario. But think about that for a second and we'll continue on. Now, here's important stuff. Let me go through this. Let me just make sure there aren't any questions yet. So hold on. Any questions? I'm going to look at the chat. Looks like we're good. No questions. So let me hop back. Okay. This is the important stuff. This is what banks, other lenders, everybody looks at on your business. This is your EBIT. In this calculation, it's your EBIT. We don't really have depreciation and amortization function in this. It's just too complicated. So this is EBIT, your earnings before interest and taxes. In your business at $3 million, you're doing 21%. You're doing $630,000 of EBIT. Okay? You have a credit line. You're paying a pretty substantial amount of interest on your credit line. $5,000 a year. Okay? You've used a chunk of this to grow your business. So your net operating income, that's NOI, is $580. Okay? Your taxes, this is taxes. Let's assume you're a pass-through. I put it at 30%, assuming that's what you have to pull out of the business to pay your taxes. That's $174. You have principal payments on your term debt, TD being term debt in this scenario. So you have $100,000 of term debt you also use to grow your business to $3 million that you're paying down each year, $100,000. So your cash flow for the year is $306. That's free available cash flow. So what's your debt service coverage ratio? Let me explain that. This is something that banks look at all the time. This is so important when you're levering up to grow a business. And a lot of businesses these days use debt. So you're killing this ratio. How's this ratio calculated? So you take your principal payments, you take your interest payments up here, then you look at what your EBIT number is, okay? And it's a multiplier effect. So you could see how 100 plus 50 is 150. You had 630 EBIT. That's about 4 times, okay? So there's your calculus on that. So most banks these days want a 1.2 times ratio. So whatever debt you carry, in this case it's 150, they want 1.2 times that in your earnings to cover it so as a covenant so you don't break that. Everyone clear on that? It's an important function that we talk about all the time. And here are your break-evens. I like to throw in an operational break-even and a break-even after debt. So remember, this business was doing $3 million. So with your debt component, you break even at $2 million. So essentially that's saying for every dollar of fixed expense, you need $2 in sales to break even. Okay? Any questions on that? This is an important construct that I want people to understand. Any questions? I'm hopping back to the chat. No questions. Okay, good. We'll jump back. So now, post-COVID, what happens? Smacked. Half your revenue gone. Oh no, what do I do? Well, let's assume your material and direct labor are in the same construct because they usually are. If they're variable, here's your contribution margin. Simple. That's half your revenue. Okay? So what did you do as an owner? You said, you know what? At half the revenue, that's great. That's fine. But here's what I'm going to do. I'm going to slash my marketing expenses. Now remember, this was $200,000. So you slashed it down to $100,000. Now look at that percentage, 7%. Let's go back. 7%, right? So you aligned your marketing budget. Okay, great. Discretionary marketing, let's cut it. Okay, here's what you didn't do. You didn't cut your executive pay. Remember I was talking about that at 10%? Now it's 20%. That's going to hurt a business. That's a lot of money to pull off a business. Your admin expense is kind of in the yellow, a little higher. You cut some. See, you're 200,000. You cut it from 250. Okay, you can manage to cut it a little bit and still function, but it's still high. And then your occupancy is out of whack because your sales have gotten cut. It's too much occupancy for where you're at. So this is what happened. But you only cut your marketing and a little bit of your admin. So what happens? So here's what happens. Look at your EBIT number. That's your earnings, $30,000. And wait a second, you have interest on your credit line still. That doesn't go away. So you're at an operating loss of $50,000. You have principal payment, and then now you have no tax, okay? But you're losing money. Your principal payments are $100,000 still. Those don't go away. And your cash flow is $150,000 negative. So what does that do? Well, it crushes you because your EBITDA is so low, 30,000. Your debt service coverage ratio is really low. Now, many people would argue, hey, banks are going to lay off us. It's COVID. Okay, I would agree with that. They'll probably lay off you. But remember, they want good operators. That's what banks do. They want you to be a good operator. So if a bank sees this, and they see that you didn't lower your executive pay in this time, and your business defaulted, you're going to sort of be on that list. They're going to want to see you come back. Even if they don't do anything this year, they're going to want to see you come back the next year and improve. So, my argument would be, if you manage this right, remember, you have forgiveness, potentially. You have a 1% loan, which is not factored into this whole scenario. And you have other things that the government has put at your back to try to help you support your business. So be smart about it. This is what we recommend. Let me explain how. Instead of going from 2 million to 1.5 million or 3 million to 1.5 million in revenue, you go to 1.75 million in revenue. So how does that happen? Well, let me explain. So your contribution margin comes up to 875. So here's what we did. We said, don't slash your marketing expense all the way down to 100. Keep it at 150. So what does that do? Now, this is very important. I said this earlier in this presentation. You might need to change your marketing. It's good to have strong marketing professionals for advice. Maybe you hire some, pivot, adjust. Go more digital. I was talking to somebody yesterday. They're talking about mobile. I mean, if you have enough capital to throw a truck out there running around with your product with a mobile scenario, there are creative ways in this marketplace to do this. You got to think outside of the box, but don't just cut your marketing. Let's assume you only cut it to 150. That $50,000 of extra spend gets you $250,000 more of revenue. Okay. Now, your occupancy doesn't change. Your admin expense, you cut it, but it's still at the 200 mark. So what does that mean? Now look, you're in yellow. You're not in red. You're not in green. You're in yellow. But here's what we recommend. Remember your exec pay was $300,000? Ladies and gentlemen, you got to cut that. You got to cut it. For this year, you got to bring it down. This is one of your biggest levers in your business to bring down. Now look where it is. It's back in the good scenario. Now, what do you think people are going to look at here? So let me take a break to see if there are any questions right now, if anybody's jumping in. Okay, looks like none. Okay, so what are people going to think here? Everybody who's running your business. You could even tell your employees you took cuts to motivate them. You could tell, that the banks are going to love this, so on and so forth. So what does this do? Wow, look at that. So your EBIT pops back up for the year. Of course, your interest is similar. Maybe it's a little more. Your taxes pop back in, principal payments. So where's your cash flow? Okay, so we only broke even, right? But we're not $150,000 loss, right? So look at your EBIT number. Now you hit covenant. You did it. You hit covenant. Mainly because you brought your executive pay down. You brought it down by $125,000, if you remember in this slide, from $300 to $175. Okay, that was a big reason why you hit covenant here. Okay, that will get you a lot of support. Banks will go, wow, I'm impressed how you did this. You really managed your business tightly. You used your marketing dollars smartly, and you were able to raise your revenue and manage your expenses correctly. Great, you hit the covenant. We're going to reward you. And how do banks reward you when you do that? They give you more line. They might give you more line. They might say, let's push out your term debt. Give you couple more years amortization. That's what we would do. We would go back to the bank and say, look, we've managed this well. Now give us cash flow back. Push out the term from 5 to 8 years, 5 to 7 years on our loan, on our term note, so we can get an extra $20K or $30K a year. Lower our rate, or maybe, give us, another $50,000 on our credit line so we can really, come back, push more back to revenue. Banks will do it. That's what they want to see. They want to see good management. So that's the point of our topic today is you really need to be able to manage back to, you got to manage back to, hold on, let me just make sure I'm stop screen sharing. There we go. You got to manage back to growth, stabilizing your company. Now, I had to do a very broad example, obviously, because I'm speaking to a wide crowd, but that, at least on this video. But one of the things to think about there is that was a sort of a manufacturing or product business, most likely, or a reseller. You might have a labor business where you're dependent on direct labor as a multiplier effect. So that's a different way to approach it, very people heavy, but as long as you map it out and plan it correctly and be able to pivot according to your levels of sales and so on, it can be really, really effective in getting your business back to health so you can manage those expenses. And that's really what we wanted to talk about today. I'm not sure how many people are on today, or if there are any questions, but I just wanted to get general concepts out there. And that's it. Manage your cash, manage your PPP, stay ahead of this. Everybody's doing it if they're smart, and we're here to help. So hopefully that was, a little bit of some clarity around what's happening and what people are looking for, especially what, banks are going to be looking for. I hope this was helpful. We will have this recording available, whoever didn't make it today. And again, please feel free to reach out with any questions. Happy to assist. Good. Everyone have a good day. Thanks.